Hey guys, it's your boy Nico here from the Small Axe Podcast. I want to show you how to use your small axe to build a lasting empire. You see, not everybody begins their investing career with millions of dollars, a huge network of investors, or the knowledge necessary to become successful in this space, and that's okay. What I focus on here on this podcast is helping you hone your skills, sharpen your tools to become the best investor that you can be. Now, I want you to sit back, relax, and enjoy this show. If you have any questions or you want to reach out to me or the guest, feel free to do so. Love you guys. Well, okay, Small Axe people, it's me, it's Nico. Just Nico, nobody else. You don't get anybody else today. I'm totally sorry, but today's going to be a really cool episode. What I intend on doing today is keeping it quick, keeping it simple, giving you some Monday motivation, some motivation to kick your butt this week and to say, yo, hey, I got this. I'm a multifamily real estate investor. All right. So today's episode is about me and how I got into my second deal in Florida. So the second deal in Florida is a 10-unit multifamily property in the same zip code as our 44-unit portfolio. Okay, so the 44-unit portfolio we purchased in 2022, right at the end of 2022, and then this 10-unit, about a year later, we purchased in the same zip code, same area, so we know the rents very well. We know exactly what we could do with this property. Now, how did I get it? All right, so I prospect all the damn time. All I do is reach out. Well, not all I do. One of the main things that I do is prospect, reaching out to wholesalers, to brokers, to property managers. I reach out to lenders to see if a deal fell through. Guys, and if you're not doing these things, if you're not constantly prospecting, then don't be the acquisitions guy. You could be the asset manager. You could be the underwriter. But in order for you to get deals done, you need to find deals. And my main focus right now is acquisitions. Obviously, yes, I'm asset managing as well on my properties. I spend a lot of time doing that. But what really excites me, what gets my gears going every day to wake up and hustle is looking for a deal. And the thing I love most about it is finding a deal, negotiating it with a broker, putting a team together, getting it under contract, and closing that bad boy. You might not love that aspect, but that's what I love. Some people love asset management, right? Some people love just capital raising. And those are not for me, but those are for a lot of other people. And those are absolutely necessary to make a multifamily property run efficiently, effectively, and profitably. So how did I get this one? So after we purchased the 44 unit, I kept in contact with the sellers. And I reached out about, 8-9 months later to the sellers saying, hey, do you have anything else I can look at? Actually, it was probably a year or so later. Anyway, regardless, I said, do you have anything else that you're looking to offload? And he said, well, no, but I was looking at this 10 unit that I'm not going to go for. It's too small for me, blah, blah, blah. It's off market. I said, oh, that's cool. So he sent it to me and I looked at the off market property. I looked at the deal. I said, I kind of like it. They were asking a certain price and I wanted lower, of course. And so I went right to the broker and I said, hey, here's where I'm at. The seller said no immediately. The seller wanted $950,000, which is great. I mean, you think about it, it's $95,000 a door in Florida. That's a discount, okay? And I'll tell you it's a discount because you're beating the 1% rule because rents could be over $1,100, okay? And I know that because we're getting over $1,100 for those one-bedroom apartments at our other properties. So you're beating the 1% rule. That's a discount. The problem is debt is an issue these days. So regardless, I said, okay, no problem. But I kept in touch with his broker because I never met him. Now I put him on my Rolodex. He's on there forever now. And I kept in touch and I said, hey, every couple of days or every week or so, I said, hey, man, how's the deal going? Have you sold it yet? He said, no. And I said, let me tour it. So I had my partner tour it. We liked it. We liked the property. It was all one beds. And then there's one studio in there as well. It was all Section 8. And we said, you know what? Let's see if we can nail this thing down. So I offered, I think it was $850 or something, or $875, and he took it. Okay, so they took the offer. Then we went in there and we had our inspection, and we realized that we needed to change the septic tank and put a new septic tank in. So I renegotiated. I got an estimate for that septic tank replacement with a drain field of around $50K. I tried to renegotiate down to $800K. We got denied, and it sat there. So we fell out of contract and we just waited. Okay. So about a month or so later, this is now the summer of 2023. I reached out again. I said, "Hey man, has it sold?" He said, "No." I said, "Okay, why don't we split the difference? Why don't we go in the middle, 825,000 rather than 800,000?" And he got the seller to agree to it. We ended up going under contract and we ended up closing that bad boy. Now, originally we had intended on replacing the septic tank and drain field. We got another uh it, another person to go check it out. Okay, so we got a second opinion, and it turns out we did not, in fact, need to change out the septic field, the septic tank or drain field. So we ended up saving money there, leaving it as is. So lo and behold, we got this property for 825,000, 10 units, 82.5 a door. Okay, that is incredible. Being that rents we're asking for 11.13 right now. Market rents are 11.50. We're going 11.13 because we're just leaving these properties as Section 8 properties. That's what Section 8 pays. And I'll tell you what, we are cash flowing. We're doing excellent. And this is kind of like a hands-off property. It is wild. I was always anti Section 8 because I didn't understand it that well. But after owning this and managing this property for a good 6 months now, I think that Section 8 is actually a great play depending on where you are and what the business plan is. So initially, we were going to go in there and renovate all the units, but after closing, we noticed that the tenants kept really good care of the units. So we're not going to renovate. We don't need to renovate to get to market rent. And that's one of the main strategies that I think everybody should be focusing on today is getting into a property without putting money in in order to get market rents. Okay. Market rate is and rents are not necessarily increasing these days, right? So if they're flat, don't put money into it to get those rates, to get those rents. There's no purpose in doing that. There's no point in doing that. You're wasting money. Bill Ham talks about this, and now I'm seeing it firsthand. We don't have to put money into this in order to get market rate or Section 8 rents. So again, we paid 82,500 for each unit, and each unit is now renting for 11.13. We are crushing the 1% rule. Expenses are pretty low, surprisingly. We have uh, very little maintenance. It's wild. I don't understand what's going on, but I am crossing my fingers and hoping it lasts forever. When we purchased this property, also, I really liked it because it's not in a flood zone. It's concrete block. It hit all the metrics that I love, all my criteria. It is pitched roofs. The roofs are brand new. I mean, like they did so much work to this property that it's like we're taking over almost a stabilized asset. And honestly, we didn't do anything to it. So we have money in reserves. We got plenty of money in the bank sitting there waiting for the next year or two or three when the market shifts and when we make an upgrade to a unit, and it's going to make a big difference in price, in rent, asking rent that we can get. That's the strategy right now. So sit, hold, money is in the bank. We're ready for the upgrades when needed and when actually going to be proven to be profitable. And then if we could prove out 3 or 4 rent units that with much higher rent, we can sell the bad boy for a good profit. Okay. Now, I said that we have money in the bank, but we're not just leaving the money sitting there. So with a syndication, you have the ability to invest that money as well, depending on what type of investment you're going to make with it. So we're not going to leave that money sitting there. We have it in a money market, or we're putting it in a money market fund, getting 4 or 5% while we're waiting to use that. So people are going to be gaining money on the money that's sitting there. I don't want you to think that we're just leaving money in the bank, getting eaten away by inflation and losing value. That's not the case at all. So recap. With this 10-unit property, I continue to prospect and keep in touch with the sellers of our 44 unit. I reached out every once in a while to all the brokers, all the wholesalers, etc. When I got in touch with this seller, the seller said, "Hey, I have this 10 unit that I'm not going for. It's too small for me. It's a good price, whatever." I ended up negotiating it for months, or a couple of months, getting it under contract, falling out of contract for a few more months, getting it back under contract at an even lower price, closing on it in, I believe it was November of 2023. So it took me from May of 2023 to November of 2023 to get this deal closed. Wild, but that's the way it goes. And if you're not up to something like this, then you need to be if you're not up for this, then you need to reconsider your position on a team. Maybe you're not the acquisitions guy, but I literally negotiate for months and months and months. I follow up like a psychopath for months and months and months. And I even reach back and I have like this map, this interactive map that I created years ago. And I still add to it every time I find a deal or get a deal. I add to it and I look at this map, and sometimes I click on something and I say, oh, it was sold in 2021. So I reach out to the broker. I find the OM and I say, hey, is this ready? Is this going to be selling again? Is there debt due? So the point is, if you're the acquisitions guy, like what I love to do, you need to be constantly following up with people, constantly on your game, constantly underwriting deals. Okay. This is it. That's my quick tip for today. If you're the acquisitions person, continue to follow up with people. Don't give up. Find deals anywhere you can, and you're going to rip it up. You're going to crush it. So I love you guys. I just want you to have the most profitable and awesome week ever. I hope you guys crush the game. If you have any questions and want to reach out to me, I would love to chat with you. Give me a call, 516-660-6912. Text me or go to my website, smallactscommunities.com. Now, if you love this episode, if you love listening to my podcast, if you love multifamily real estate and you know somebody else would love it too, please share this episode. Please leave a 5-star rating, write a review, share this with as many people as you know. If you were to post something about this on social media, I would be forever grateful. I love you guys. Reach out to me. I want to help you, and have an awesome week.
All right. Hey, Small Axe community. I would like to say thank you for listening to another episode of my podcast, where we show you how to use your small axe to build a lasting empire. Now, if you liked what you heard, it would mean the world to me if you would subscribe, leave a 5-star rating, and write a review. Also, if you want to get in touch with me, go to my website at smallactscommunities.com. Book a call with me. And until the next episode, keep sharpening those axes.